Welcome to the Tax Cafe. I am your bartender boss, and with me today are my esteemed guests, Rolf and Peter.
Thank you.
And we are going to be discussing the Pandora Papers, the latest leak in the ICIJ's long offshore list. And we're going to zoom in on what is happening. The Pandora Papers, perhaps maybe a little background. I will ask Peter for this, because what even are we talking about, Peter?
Well, thanks, boss. The Pandora Papers is a leak that follows in a series of leaks this past decade, and it sort of exposes how the politically affluent people all over the world are using offshore regimes to shield their wealth, to avoid taxes, to evade taxes, and in some cases, even the source of their wealth is unknown. So it might be illegitimate. So maybe money laundering or corruption that we face here. And the fact is, so we had the Panama Papers, Paradise Papers, etc., LuxLeaks, but this is on another scale because it involves around 330 politicians all over the world.
So there you have it. We will zoom in on what is actually happening in the Pandora Papers. But first, maybe we can make a little timeline for the ICIJ. Peter, you looked into this as well. Please contextualize. What are we seeing? Who are they, the ICIJ, and what are some of the things they may be known for? And welcome to everyone, by the way.
Yeah, thanks. So the ICIJ is as you can read, the International Consortium of Investigative Journalists. And that is an organization that employs, or doesn't really employ, but they work with over 600 journalists from over approximately 120 countries all over the world. And what they do is they expose certain themes that are, let's say, important and controversial at the time. So what we can see in the timeline is that in the not in this decade or in the so we can see that from 2000 to 2012 there were certain themes that were very controversial and important from a societal point of view. Among those themes were big tobacco, merchants of death, so war commerce, Iraq, Afghanistan, U.S. military aid, and all that kind of stuff, looting the seas, climate change. And now, this past decade, we've seen a shift in momentum from these topics that we just discussed to a new financial secrecy theme, which is gaining a lot of momentum these past 10 years or 12, 13 years. And so what we see in this timeline in the bottom of the screen is that the OECD and the European Union, they both are implementing or they're both drafting a lot of legislation actually to address the financial secrecy and tax avoidance themes. And alongside that, in a parallel line, the ICIJ also starts to shift its focus on these financial secrecy and offshore themes. So that is, they are working parallel to one another, but for the same cause and caused by the same momentum.
So on the one hand, the skepticists might say that the ICIJ appears to be instrumentalized by policymakers, yet at the same time, it appears that the ICIJ may have investigated some of the most noteworthy policymakers of the world. So perhaps it's a societal hot topic, and it's difficult to see if something's being construed or something's really amiss, and the ICIJ is doing the general public a big favor. That's why we deep dive into the material right now. Let me zoom back into this right here, because we can see a clear shift from addressing societal issues in the non-tax manner, such as matters related to wars, matters related to public health issues, and they're shifting to financial crime. We're shifting to white collar.
Exactly. And May I just add, that is not to say that the societal and human rights topics have disappeared from the ICIJ's radar, because there still are some reports and leaks that involve those kind of things, but there were none of the financial leaks before 2012, so that is a new thing.
So a lot of this takes place in a context of tax, and we are tax guys, and we are zooming in also to see whether this is all correct, because what the big questions we want to ask or we want to address is, what do we see, what do we learn, and what's taxi about it? So let's first zoom in on two major elements. For the sake of this presentation, we need to clearly define what is tax avoidance and what is tax evasion. It's actually quite clear, or it's quite easy, because tax avoidance is legal and tax evasion is illegal. But the more the two terms are intertwined, the more difficult also it is to see which is which, to see where one starts, and to see also, well, what really makes one or the other. So let's look at tax evasion. That basically means if there's two routes presented to you to the same end, you choose not the more expensive one, and that in itself is tax avoidance. Then tax evasion basically means not dodging taxes on account of, well, not abiding your disclosure, your mandatory disclosure, or not fulfilling reporting obligations. And there's a bit of a twilight zone where you do apply the law, but you do it contrary to its spirit. And that is something that's been a matter of hot debate in tax land recently. And that also involves clearly defining in which day and age you are looking at something and when it took place. So there can be a bit of an export of current day principles to previous day decisions, and that in itself is a very difficult debate. But let's zoom in to make this a little bit more clear. If we look at, in a tropical route, at what could be tax avoidance, then there's a classic example here. We have a multinational corporation with a headquarter here in the green patch of grass up top, and then we also have a subsidiary that's in the green patch down below, and in between is an ocean. And in that ocean lies a tropical island with, well, meaningless natural resources of its own and a small population. And they need to find a means to finance themselves. And often what they do is resort to a financial system. Now, this tax haven has a 0% corporate tax rate. And what can happen is the subsidiary may have been extended a loan by the intermediate company in the tropical island, which is taxed at 0%. And it may pay, for instance, interest to that intermediate, which would be deductible from the taxable base in the subsidiary state, but headquarter state doesn't tax until it is wired to that state. So this could be a deferral regime. And this is something that can be addressed through policy. For instance, if the headquarter state were to adopt CFC legislation, where any company that is controlled, so over 50% of the voting rights, and situated in a low tax jurisdiction, is included in the taxable base of the headquarter, regardless of whether money has actually been wired yet. Another thing that could happen is that the subsidiary state may deny the deduction of the interest payment, or it could levy a source withholding tax equal to the corporate income tax rate, so it would be an ineffective dip. Or either state or both could argue that the intermediate recipient is not material at all, so should be ignored. So then basically what we see for tax purposes is a direct payment, and then the whole deferral scheme is canceled. And this is really what we are seeing on a global scale right now. A lot of anti-avoidance directives are being adopted, and these forms of avoidance are becoming less and less efficient. And that is because it's a sign of the times. This was carefully designed to exist before, and is now being carefully designed to no longer exist. And that is through legislative action we can mitigate it. Now, what is tax evasion? That is this situation where, for instance, the subsidiary makes a deductible payment, the intermediate company who receives it does not report them, and it does not exchange information with headquarter state, and the headquarter people do not report it to their tax authority. So this is where taxes are evaded, and that is due to incomplete reporting. And such behavior cannot be fixed by taking legislative action in a tax context, because the tax evasion actually doesn't use tax law to be efficient at all. It actually relies on non-compliance, and making compliance legislation more strict only means that people partaking in evasion become more non-compliant. So with me is Rolf, a professor at Maastricht, a teacher of tax and ethics. And what is something that you have seen as a shift throughout your career in the sense of avoidance, evasion, and the difference between the two?
What you see is that the clear guideline that's also mentioned at the website of, for example, the Dutch tax authorities, is that tax avoidance is avoiding tax in a legal matter. You still declare your income, so you report your income, where tax evasion is not declaring it. So actually it's not, as you say, using taxes to avoid taxes or tax rules, it's just not declaring the income. What you now see is that where they intertwine, that the public has an opinion on which part of tax avoidance they think is being accepted. So what you see is that tax evasion was normally the illegal one and tax avoidance the legal one. We now have an unaccepted tax avoidance. And one of the strange things is, if you look at the Panama Papers and also the Pandora Papers, what they show is which people are actually trying to evade taxes. Of course, you also have some tax avoidance, because structures that you can use to avoid taxes are often also very useful to evade taxes, just as cars are also very useful to use as a getaway instrument if you rob a bank. But it doesn't mean that everybody who owns a car robs a bank. And what you now see is that all the rules that are attacking tax avoidance, they only tax the people more that were already reporting their income already, but just taxing those people and those institutions more is not killing tax evasion, because people who have criminal money, public interest people like country leaders, ministers, kings, queens, and princes who actually have money from bribery, they are not avoiding or evading the taxes because they want to pay less taxes. They don't want to show people that they earned the money. If you earn money by selling coke, by selling stolen cars, you don't want to pay more taxes on it or less taxes on it. You just don't want to show people that you have it. So my question is whether more tax rules actually will get rid of tax evasion. I don't think so. But more tax rules will increase the benefit of applying tax avoidance. It's what Ronald Reagan already realized when he was the president. He said, if I lower the taxes, people and companies pay less taxes, so they are less inclined to go into tax avoidance. It broadens maybe my tax income as a president. And he was right. So the risk that I see is that by using the public opinion regarding what they think is acceptable, could create a situation where people are more inclined to put an effort in avoiding taxes because they feel that they're paying more than their fair share. Because that was the purpose here behind the investigations. Panama Papers, Pandora Papers, everybody should pay its fair share. But the question is whether you realize that with just taxing the people who already declare everything more and more already.
And so the difference between the two is sometimes difficult to determine and can become more difficult as, let's say our morality, our view of the morality in this shifts.
So depending on time and place, what you think is acceptable, fiscal ethics, what's a fair share of tax depends on time and place. Whether you are on a tropical island, whether you are in the US, whether you are in Europe, whether you are in Asia, each country has the rules they're used to on what they think is acceptable and unacceptable. So there's no clear guidelines, no exact science on what's a fair share of tax.
And so since it's difficult already to determine the difference between the two purely on a definition, it becomes even more difficult to see from a societal standpoint if you see how in practice tax avoidance can work. Because, this is where we have made a depiction of a classic CV-BV structure, which is a previous Dutch-American route to generate a deferral scheme, because the United States only taxes money as it gets there, as it's onshored. And the Netherlands does not tax money going away. And so if you can create a situation such as over here in the CV, where we declare in the Netherlands that the money has left the Netherlands and we declare in the United States that it has not yet arrived, you can create deferral. And this is, some say it's an export subsidy made by the United States to do more business in Europe in order to gain influence and to grow their economy. And some people say it's being abused by corporations doing business abroad, and they are using the deferral to the detriment of the public. Well, and that shifts, the view of this shifts. But as you see, this is a simplistic depiction of the structure, since it in itself can be quite sophisticated. It can also be very difficult to see with the naked eye whether the structure that is presented to you is one of avoidance, legal avoidance, or whether it's one of evasion, illegal. And this is an evading structure. This is where, for instance, you pay money to a jurisdiction that does not disclose information to others, and you can evade taxes by not fully reporting your income in your home state. And that is when the question arises, what would we use offshore jurisdictions for? Well, they are commonly used for two things: tax avoidance, to create deferral. If you can make sure that money is received somewhere where it's not taxed, or effectively taxed at 0%, and then doesn't get taxed at a realistic rate until it's wired forward, then you can create, for instance, deferral using an offshore jurisdiction. But sometimes it's also used for anonymization. And that basically means if you own assets in the offshore jurisdiction may not disclose your ownership to any other institutions, and you may have obscured your possessions. And then the question arises, is tax avoidance always bad? And the answer actually is no, because making one choice more affordable than another can be a policy instrument to encourage the less costly behavior, and optimizing tax can then mean choosing the encouraged behavior. For instance, when the excise duties on cigarettes are increased and people stop smoking, they aren't so much evading taxation on cigarettes, they are actually choosing a behavior that the government, the policymakers, want to encourage. In that sense, choosing the cheaper option isn't always a bad thing. And then the other question is anonymization always bad? And the answer here is it can be if it leads to tax evasion or the obscurization of data with a public interest. So that means if we no longer disclose something we would have had to disclose in the home state, place it offshore and no longer disclose, then that can be a bad thing. But it isn't necessarily if it merely serves to avoid danger to life, extortion, or the likes. So that is maybe something that I can ask Rolf about. What do we mean by that?
What you see is that a lot of family-owned enterprises want to keep the family owning the enterprise in the near future, and they make their children and grandchildren an owner of the company at a young age already. But you want to avoid that your kids are being either called about or that is known that they are wealthy on paper. So anonymization is often used to make it to the public unidentifiable that next generations are already wealthy and rich. But it doesn't mean that if you use anonymization to avoid being in the Code 500, in the Forbes list, or that everybody can see how wealthy you are, that you're not declaring your income. That's different, of course, if you use anonymization because you are a politician in a not so democratic country and you get a lot of bribes and you don't want your voters to know how wealthy you are. I mean, then anonymization may also be to avoiding any threat of life, but that's a threat of life because you want to avoid that people are threatening you because you are accepting bribes. But what we here see is that the minority use is often from a criminal side, but that the majority uses anonymization because they don't want to be in the newspaper every day. They don't want everybody to know what they have and what they own. That can be a valid reason, but what we have here is by actually declaring all this, we use the abuse by the minority as a reason to have more rules and stricter rules for the majority who is declaring their income, who's declaring their wealth, who's paying the taxes, but now has to tell everybody that the kids are already wealthy, has to tell everybody who owns what. And I think the valid reasons are set aside a bit too easy because we think it's very easy then to make everybody pay the fair share of taxes. So taxes are actually sometimes abused to create something where maybe the basic principle starts at a different level, getting at the root cause instead of only getting rid of the headache.
So with that in mind, we look at what the Pandora Papers actually show us, because policymakers have gratefully used some of the leaks to put a crackdown on, individuals, sometimes for a gain to their personal benefit under their constituents, perhaps gain votes. Sometimes a narrative can be very popular where the more wealthy people or business owners are to be cracked down on, when in fact they may not actually be doing much wrong. But since most of your voters won't belong to the last decile of wealthy persons, it's easy to please them by placing a larger burden on those last. And so we always need to be very careful. What are we being presented with, and what is the evidence? What are the logical conclusions we can take from the evidence? So, Peter, I ask you now to contextualize perhaps the Pandora Papers themselves. What actually are we looking at?
Okay, so on a technical level, we are looking at roughly 2.9 terabytes of data. And that is data that consists of, let's say, PDF files, images, Word docs, PowerPoint presentations, etc., just all kinds of digital formats. What is good to know about this is that the terabytes leaked by the ICIJ, it stems from 14 financial service providers in, among other countries, Panama, Belize, Switzerland, etc. And the identity of those service provider companies is not yet revealed, I think. And I think that is maybe also for protection of the sources. But so that is in essence what it is. So it is a very large data batch. There are, as we previously discussed, there are a lot of politicians who now appear to have financial interests through offshore regimes. So that is something that aggravates the public, obviously. Also, there are about 100 billionaires, celebrities, like artists, etc., that also use these offshoring regimes to shield their wealth. And that is not to say that they don't declare those financial interests in the offshore companies in their personal income tax returns, but there is, of course, some controversy around using such a company to shield your wealth or to invest in the rest of the world.
So then perhaps we can zoom in a little bit on the individual cases, because as we state here, the estimates for money held offshore is $6 to $32 trillion. And what we are seeing here is hidden wealth, tax avoidance and tax evasion, or money laundering, potentially on a large scale. And so we need to deep dive a little bit into individual cases. And these are the countries where the politicians are from. Funny enough, it appears that no American or Australian politicians were involved.
That is not to say that there are no U.S. politically affluent people involved in offshoring regimes, but for now, this leak does not involve them. But
So let's zoom in on a case by case basis. And since we are Dutch, we of course gravitate first to looking at our guy in the leaks, our Minister of Finance, who is being targeted a little bit for being the mouth which speaks the Dutch standpoint, for instance, in the European chats about COVID support. And we, with the Netherlands, were part of the Frugal Four, and we were very much opposed to any support being granted to southern European states who had perhaps a more lapsed budget than we had been having over the last years. And therefore, it's very important for him, if he declares this message, to be a very good boy himself. Because if he preaches, let's say, good finance, then he should also himself be preaching something very good. So if we are looking at the individual cases, there's four. We made a bit of a stoplight, of a traffic light here. there's a few categories we look at. Is this a situation of tax avoidance? Is this just smart tax planning, or at least does it have a smart tax planning side effect? Are we looking at tax evasion, which is a no-go, a definite no-no? Is this a structure that shows us that somebody has not disclosed information so as to save taxes? Then we have the question, are we looking at secrecy? Secrecy may not also need to be a bad thing, but at least we know that a structure is being used to not disclose information, which does not yet mean that they are not paying taxes. And then we have a fourth category, which is a bit less of a legal thing, but it's more of a public standpoint kind of thing. Is there a difference between what the individual involved practices and what the individual involved preaches? So it could be that from a legal perspective, the person may have done nothing wrong, yet at the same time, they may be very vocal about, well, not looking for the edges of the legal application, but being very good, being a good citizen, and then themselves appearing in these leaks. So let's zoom in on the individual cases here. And Peter, I ask you to perhaps elaborate on the first one.
Yes, all right. So Wopke Hoekstra, to start it all off, in 2009, he mounted the Kilimanjaro in Tanzania. And when he had just climbed that mountain, in the evening, he sat down with three friends at the just at the base of the mountain, and they had dinner. And one of his friends, he told Wopke about a certain safari project. So he was developing safari parks in Tanzania and Kenya. And he asked Wopke, his friend, to join him in investing in this project. So Wopke obviously agreed to invest, to co-invest. And he did so for a sum of approximately 26,000 euros. So just to place this in a sort of a perspective, in a frame, Wopke Hoekstra was a partner at McKinsey, a consultancy firm, and he, in that capacity, he of course made his money. And in that light, this investment of 26,000 euros is relatively small. It's relatively minor. So for him, it was more of a charity thing from the start, and he wasn't really looking for a profit on it. So that is what his story is now, and it sort of resonates with me because I think, given him being the McKinsey partner, and also having a lot of assets himself, this is such a small interest that it doesn't really matter to him. And it also shows, if we look at the timeline and how he really invested it, and when he sold his assets, he only made 5,000 euros of profit, a capital gain, and that was something that he donated to a charity. And he did so before being or before becoming the Minister of Finance of the Netherlands. So he did that in order to avoid the conflict of interest, albeit a small interest. There was still a conflict of interest, and he wanted to avoid any perception of such conflict or the conflict itself. So he sold his assets, or he sold the shares, and he kept a gain of 5,000 euros over the course of which he made over the course of 8 years. That was something that he donated. He gave it away. But now his name, of course, came up in the Pandora Papers, and people started asking questions about, well, this guy, he just became the Minister of Finance in 2017. Before that, he was part of the Senate in the Netherlands, and as a Senate member, he also was part of the Financial Committee, and that Financial Committee already...
Not a good look.
Not a good look. And that Financial Committee already discussed several matters of like tax avoidance, etc., how to address tax avoidance in the period from, let's say, 2010 to 2020. Those were topics that committee addressed, and he was part of it while he had an interest in a BVI company. So what he did, he put his money, 26,000 euros, and he directly invested it into a British Virgin Island company. That is a company in a jurisdiction that does not have a corporate income tax. and that company in which he invested further invested then in the Tanzania and Kenya safari parks. A thing that may be good to note here is that he says he always disclosed those interests with the Dutch tax authorities, and also that had he invested through a Dutch BV that invested in Tanzania and Kenya, that he himself would not necessarily have paid more taxes than he did now. But we don't know the very essential part of it, like how the BVI company further transferred the money to the Tanzania and Kenya company, if that was through loans on which they got interest payments, then that could have been a case of base erosion in the African countries. But so here we have a seemingly sympathetic case of him giving money to a development cause for African safari parks from the good of his heart, while he did so through a BVI company. And before that, or let's say during that investment, he was part of financial committee of the Senate. So
to a certain extent, Peter, you are defending him, and I know that. This may or may not have been a case of, at best, tax avoidance, and perhaps not tax evasion, or a goal was not secrecy. But Rolf, you have some problems with this still. Please let us know.
One of our problems is that it seemed that he didn't see any moral problems with eroding the tax base, because that's at best what happened in either Tanzania or Kenya via the BVI. And when he was defending himself, he was actually mentioning that he did invest in this project, but that he never looked in the annual accounts and he wasn't aware of the structure. That was while he was in the Senate in this committee that was about financial compliance, and just before he became a Minister of Finance. Now, as a Minister of Finance, he was very harsh on some Southern European countries that they should have more focus on their compliance. And also, as a Minister of Finance, he actually was involved in anything that had to do with the COVID state aid and acquiring a share in KLM Air France. Now, knowing that if he's not even looking into these financial details and knowing how things work for his own investments, I hope he had a better look at the annual accounts of KLM Air France. And but regarding his function as a Minister of Finance and the role he had to play in defending our Dutch position in Europe when it had to go about Eurobonds, COVID support, you now see that he's being called the hawk in Spanish and Italian newspapers, where they say he is talking about our moral and our ethic, but his own personal ethic is maybe a bit at discussion. He didn't do anything illegal, but what he did was not probably morally accepted given the time frame in which it happened. So that the same you see with for example, the supervisory board member Tom van der Zwaan, who is a supervisory member of a bank, ABN AMRO, which is also owned by the state. He is installed there by Wopke Hoekstra, only 6 months after Wopke Hoekstra became Minister of Finance. And what struck me there is not that he invested via the BVI or via Guernsey, but that while he was member of the supervisory board, that was not a reason for him to get rid of these investments. Only when it came out with the Pandora Papers and he realized that it harmed him in his image, it was a reason for him to get rid of it, to donate anything to charity, and then say, I'm sorry that this happened. I mean, so these people have a moral that says, as long as nobody knows it, as long as nobody sees it, and it is legal, I'm happy to do so, because I don't think that the source of wealth is illegal for either Wopke or for Tom de Zwaan. I don't think that they have not declared it in their income tax return, but they show their own morality that they accept from the public, that they accept from the bank clients, only after it became out in the open. So that morality is more the tone at the top of the people who are leading our country is different than the tone that we accept from the people who pay the taxes.
Brianna would say, "Don't tell me you're sorry because you're not. You are only sorry you got caught."
Exactly. I think that summarizes up. And I think for a lot of the people who are using this structure in a legal matter, they're sorry they're being caught. And then, of course, we have the illegal ones, the ones who want to shelter criminal money, bribe money. Uh,
Who may feel the same way.
Yeah.
So if we look at the case by case for Wopke Hoekstra, we are saying perhaps tax avoidance. We find not much of that because by its definition it is legal, but it may be questionable, but it becomes questionable if there's a discrepancy between what a person of public interest practices and what they preach. And if we follow Rolf's discourse here, there is a clear-cut case of that. So we say Wopke Hoekstra, even though the amounts involved are on this list quite low, on the naughty list still, because in a binary world, this was a bad decision. Let's move on. The next case by case, we're looking at Tony Blair, a very vocal advocate of higher taxes. When he was with his Labour government, he was very vocal about education being the key to a better British future. And there were windfall taxes and, as the Tories called it, stealth taxes that were being imposed to increase revenue that could be invested then into that education. So one would expect Tony Blair to be, well, very to practice lots of restraint when there was ever a possibility to even avoid taxation. So
Tony should be as straight as possible.
yeah, right. It's straight shooting Tony. Let's look at what he did. Peter, please explain what the Pandora Papers teach us.
All right. So Tony, he wanted to buy a property in the United Kingdom in London for his wife, and she's a barrister. So she needed an office. So he decided to buy an office. But if you do that directly, so if you buy the bricks, the actual bricks, the bricks and mortar, then you will have to pay stamp duty. So it's a real estate transfer tax in the UK. Instead of buying the bricks, he bought the shares in the company owning the bricks. So, and in this case, that company was a British Virgin Island company. And what makes everything a bit more sensational is that the seller allegedly is a Bahrain family, which is politically affluent. So it's the minister of, industry and tourism, that allegedly was the seller of the shares, which he sold to Tony Blair. So what this suggests is, and what the papers are implying, is that Tony used his connection, used his network with other politically affluent people to exploit this network and then to avoid stamp duties in the UK. So that is what was the deal here with Tony Blair.
Is there an opinion you may voice about this as well, Rolf?
Well, from a tax legal perspective, this can be considered still legal. I mean, in the Netherlands, you could also avoid real estate transfer tax in the past if you would buy the shares in the company that owned the building. We prepare that because we say if you have shares in the company that owns only real estate, then also the shares will trigger transfer tax. Now, obviously, here, if you would use the BVI company, that wouldn't happen. But the fact that he was so harsh and so loud on using these kind of structures, and in this case, using a BVI structure, specifically set up to avoid this, makes it actually that he is, again, green on the tax avoidance scheme. Is not illegal what he's doing, but in his position, defending the political ideals of his party and looking at what his voters can and can't do.
Coining the catchphrase "fat cats."
Yeah, it's actually. I think the dog agrees with me that Tony should have a red light also on not practicing what he preaches.
And so we have awarded him, Tony Blair, not super naughty from a tax perspective, but from a political perspective. Perhaps this is a bit questionable. So let's he's on the naughty list as well. So Tony, Wopke, you are both on the naughty list following the Pandora Papers. Not much hours, but the more traffic light one.
I think they both will have a big issue when they need to defend tax morality in a European context or an OECD context again, representing their country in the future.
Exactly. And just to add to the Tony Blair case, Tony Blair and his wife, they onshored the BVI company after they bought the shares. So right now, if they would resell the company shares, they would not pay real estate transfer taxes or stamp duties, but they would pay capital gains tax in the UK. And they said that in a sort of self-defense or in a way to save face. So that sort of makes everything all right in the eyes of the Blair couple. Also, it does show, and when we look at the other cases that we will discuss next, a lot of the Pandora Papers people that were involved in these kind of schemes, they invested a lot in UK real estate, always through these offshore regimes. So that also exposes a flaw maybe in the legal framework that the UK has in its real estate transfer tax.
Right. So I was going to say, because the way we have done this in the Netherlands, you have an entity which for more than half of its asset value consists of real estate, then transferring its shares usually would trigger real estate transfer tax as well. That seems like almost too easy a fix. And the UK legislators themselves are quite sophisticated. So one would almost suspect there's a reason for not closing this loophole. But what would it be? Is there a budgetary thing, or is it a lobby from those that transfer real estate using offshore entities, which may be actually the fat cats rather than the blue collar workers who need housing as well? So does not closing this loophole effectively make the real estate transfer tax something that mostly Labour's constituents pay, while their leader does not?
Exactly.
Suggestions have been made that it's sort of the old boys network that is giving themselves jobs and functions, keeping this intact. And that's, of course, also a sort of conspiracy theory that's beyond it. There also have been conspiracy theories that keeping these kind of structures intact was the real reason behind the Brexit, because then the UK shouldn't have to commit to all kind of EU transparency and base erosion avoidance rules. What these papers indeed show is that there may be some sort of truth behind it, or at least it's valid to ask the question you were asking, Bas, whether the fact that there's an easy fix for it, why don't they apply that easy fix, and what's the reason behind it if you really think that this is not done anymore and not ethical anymore?
So you haven't joined a tinfoil hat webinar. We're trying to be tax professionals here, but one does wonder. So talking about the old boys network, we zoom in then on Azerbaijan, where we have the Aliyev family case. And Peter, please take a minute to elaborate on this one as well.
All right. So if you could please just show me the next slide, so I can
go.
have a okay. Right. So the Aliyev family, the current president of Azerbaijan is Ilham Aliyev, and he's the son of former President Heydar Aliyev. And I'm not sure.
Oh no, I'm pointing to the time.
Oh, you're pointing to time.
Yeah.
Okay,
So
sorry.
we don't
So
keep
I'm on the
people
clock.
on
I'm on the clock. I will keep it short. So essentially, what is the most sensational of this case is that the Aliyev family appears to have amassed a great fortune, of which the source is unknown, or people of course imply that they have used public funds to fund their private wealth. So that is the main aspect here of the Aliyev family, and they apparently, the entire family, they use 84 British Virgin Island companies. And what they also did was they had an estate in the UK, which they bought in 2009 for, let's say, 33 million pounds. And then 9 years later, they sold this property, the exact same property, for 67 million pounds to the Crown Estate, which is the organization that financially manages the British Queen's financials. So this obviously, like you said, we're not a tinfoil hat webinar here, but we're discussing the technical content of it all. But it makes you wonder: did the Crown Estate favor the Azerbaijan Aliyev family in giving such a large purchase price to the family for something that was bought 9 years earlier for only half or less than half? So it makes you wonder, this is just something that implies that something is not right, but we do not know for certain.
Right. So in real estate, those capital gains, given the recent market developments, may not be strange at all. But given the public funding involved, better transparency would be preferable, and maybe BVI entities aren't the means to that end.
Right. And London real estate or UK real estate does not really follow the same trend as in the Netherlands or mainland Europe. It's a lot. Yeah, it's not. It doesn't go as fast.
Much more stable because
Yeah.
it was already expensive.
Yeah. Yeah.
Rolf, any thoughts?
Well, in principle, again here, using the BVI to shelter your money and to maybe create a what you call secrecy structure, so that it's not known to everybody in the world what you own, is in itself not illegal.
Mhm.
But if you use that to hide the fact that you use public funds for your own benefit, or that you are getting bribes, or that you are getting money from other governments so that they would allow you to do some investments in their countries, then the secrecy doesn't become being used for legal purposes or to avoid being in a newspaper, but actually to avoid you all owning white-collar criminal-owned money.
Exactly.
And then it becomes illegal. Then it becomes not just tax avoidance, then the fact that you're hiding white-collar criminal money in a BVI structure then becomes tax evasion, but it becomes even more, it becomes maybe a public crime to your country.
Yeah.
Now, I cannot assess that at this moment. We cannot assess it because we don't know whether the Azerbaijan family has reported this in their tax return. And we also don't know whether maybe in that country it's allowed that the royal family gets 20% of all the natural resources. In the Netherlands, we also have allowances for our king and our queen and for the kids, for the king and the queen. So we don't know that, but it smells a little bit. And that makes you wonder whether, again, those transparency rules should be much more focusing on knowing where the wealth of money is coming from. We call this tax evasion, but tax evasion starts with actually not being very critical in asking yourself, what's the source of wealth? That's a job that
funds.
Origin of funds. That's a job that banks have. Banks have to ask themselves what the source of wealth is, and then they cannot accept it. And obviously, in the BVI, those rules are applied a bit more liberal than we apply them in the Netherlands or in the EU at the moment with the current rules.
Yeah, and just you already touched briefly on this, but it's just good for everyone to keep in mind that this is a leak by 14 financial service providers, and it's not a leak by tax authorities anywhere. So we, in all of these cases, we don't know whether they reported the income. Maybe they did, and so it's not tax evasion. That could be the case.
Exactly.
So we every time when we highlight the tax evasion button, we actually do not know for certain, but we might as well.
We just say
we have to make some
strong.
assumptions,
Yeah.
and we want to avoid that. To assume leads to making an ass out of you and me, but we do have to, because we don't know everything at the moment.
Hey, so let's go for another case then, because we also have the Qatari royal family, Tamim bin Hamad Al Thani. That's a difficult one for us Dutch speakers to go for, but I did it. Peter, is this an interesting one?
Yeah, it is, because it's really similar to the Azerbaijan one, because this is really about how much cash and how much fortune they have amassed and the origin of funds. So there's a lot of they have a lot of assets through Panama, BVI, Bahamas, and Cayman companies, and they have, of course, UK real estate. And they have approximately 1.3 billion US dollars worth of assets in all these structured through all these offshore companies. And it is really unclear how they amass such fortune. And this again makes you wonder, did they funnel public funds to their private accounts. So that is not proven, but it does make you wonder. Yeah, that is the case here, and that is why.
So the dog has a nose for when
Yeah.
things are fishy. Rolf, what do you think?
Yeah, similar to the other case, you don't know whether they have been declaring this and whether the money has been acquired and earned in a legal way. But the fact that they use these secrecy jurisdictions to hide it makes you wonder whether somebody who is in a public function has a reason to hide the funds.
Yeah.
And until we know what the source of wealth is, we cannot assess whether this is legal tax avoidance or tax evasion. But given the amounts of money, it smells a little bit.
Yeah.
And the dogs also think that it's something we should investigate a bit further. And I think with more transparency and more rules on the source of wealth, you can get rid of these illegal uses of tax haven companies and tax avoidance and bring it back to what it's used for. I mean, we have treaty networks to avoid double taxation. We have holding regimes and holding companies to create effective global structures in a globalized world for multinational companies. But the problem is that if you have a treaty that can avoid double taxation, you can also use it to create non-taxation. And that's what has been happening. And these structures are now being abused instead of being used. And you want to get rid of the abuse, but you will not get that by just taxing harder the ones who are already declaring it and who are using this in a legal matter. What you need to do is, focus on the illegal abuse of these structures.
So maybe then let's go to a next case. A Kenyan family, Kenyan presidential family, one of the most impoverished countries in the world. Well, they're not doing so bad right now, but let's say they're not on the top of many wealth index lists.
No, let's say that the average annual salary in Kenya is about $8,000. So that is how poor they are there, and then it is extra. How do you say it? Schrijnend.
Yes, it is. It is quite a case because they are developing and doing quite nicely. But yeah, let's say exuberant wealth in a country like that is all the more reason for suspicion.
Exactly, and in this case, it is extra sensational because this president, Uhuru Kenyatta, and I believe his surname means from Kenya. He has always been a transparency advocate, and by being a transparency advocate, so he has always fought against corruption. That was his war cry. So
how much in assets does the Kenyatta family actually own? I'm seeing here they have a 500 million in assets.
Well, that is an estimation, but the thing that the Pandora Papers have exposed, have revealed, is that it's at least 30 to 50 million. And then there are a lot of other documents that suggest that he has like $500 million. So that is quite a lot, and especially for someone who is always fighting for public transparency and for an end to secrecy. So yeah, that is extra.
Right. So he has been quoted: "Every public servant's assets must be detected publicly so that people can question and ask what is legitimate." And so it would seem a little bit odd that the person combating, who won elections by combating corruption, may have $500 million in assets under control through obscuring entities. And
Exactly.
He may have amassed it in totally legitimate matters. Nobody may know how wealthy he was before he rose to power, and whether this may be legacy or from a different day and age. But let's just put it this way again. It is exuberant and it is fishy.
Yeah.
Rolf, what do you think? Or do you think this case speaks for itself?
Well, I think the case is similar to the other two we have. And what the difference is between, for example, the Panama Papers and the Pandora Papers is that it shows that there are so much people who have political power, who have assets that they are being hiding. And then the link between political power, where you have a public function, and then feeling the need to hide your income makes me wonder whether they acquired it in a legal way. We will not know until we investigate it a bit further. But I think this shows that we have still a long way to go. And I think just increasing taxes is not helping to create a moral. I think it will just encourage some people, and it will probably only harm the ones who are already reporting and disclosing it. I think this has more to do with not just looking at the tone at the top, which we hear in the Netherlands, that companies, multinational companies, have to pay their fair share of taxes, and we think the tone at the top is important. I think it goes both ways. Also, governments who need public funding, who need tax money for their budget, they need to think about what their tone at the top should be,
Right.
and not just disclose what they have or get rid of their investment, whether it's 500 million or whether it's 25 million or 25,000 euros. It doesn't matter. It goes around the fact that you think it's okay until your name is in the paper.
Yeah.
In the Panama Papers, the Pandora Papers, and I think that shows that there's still a long moral way to go, and that we have a lot of people working for the public interest, that when it comes to their interest versus the public interest, sometimes still choose for their own interest, as long as their head and their name is outside newspapers.
Right, and I guess that even a takeaway we may have is that if the leaks such as this are being used as a driving force behind tax reform, that whichever way you summarize it leads to a larger redistribution of private funding to public funding, that if those public institutions are prone to corruption, then increasing tax rates is actually detrimental to societal welfare and equity, because more of it will end up in the wrong pockets. So that, I guess, is something that the Pandora Papers have been very useful for. Perhaps this is also a call to action of not accepting the discourse each and every time that tax increases would benefit the many, because as long as corruption may be rampant, then increasing taxes may actually benefit very few, and the private money could have been better spent in private hands. We have a last case, and that is Shakira, and she was somebody who did hardly anything wrong. She has a BVI structure, and she was basically using this for, to make sure that all her assets couldn't be traced through publicly accessible databases.
Yeah. What is funny about this case is that she set up those BVI companies while being investigated for tax fraud, tax evasion in Spain. So that is something to consider, although it is a separate matter.
Which is a poor decision then, because as the saying goes, with tax havens, due to the behaviors of perhaps others, where there is smoke, there is bound to be a fire. And so maybe we should wrap it up in that sense. Any final thoughts, guys? So what do we learn from the Pandora Papers, and what are some logical next steps, and what are illogical next steps?
I think one takeaway is that you cannot solve the issue just by increasing taxes or by harmonizing taxes. There's also something more fundamental. It's like if somebody wakes up with a headache, you can give him a headache pill every day, but you maybe look what the cause is. If he drinks a bottle of whiskey every evening, maybe you should help him stop drinking a bottle of whiskey instead of giving him more headache pills. And I think that we sometimes think that these tax avoidance and tax evasions gives us a headache, so we solve it by increasing the taxes, increasing the rules, having all these OECD BEPS rules, which in itself are not wrong, but it doesn't take away that people who are getting bribes, who are using public money for their own benefit, who don't want to show how wealthy they are because they are using criminal money to enrich themselves, they will not be tackled with increasing taxes. They will only be tackled if we create more transparency and make sure that we are more focused on the source of wealth and not just on taxing the wealth.
Okay, and my final thoughts are that the Pandora Papers show, and it's similar to the previously leaked papers, but that the people in the world that are by power to actually change the financial climate, that actually who are in a position to have a certain influence to enact these changes, that they are the people who apparently have financial interest through the offshoring regimes. So it is a bit hypocritical and naive to think that everything will change, because the people who are responsible for that change to happen are also involved in those very offshoring regimes. So it's
it can, in that sense, be funny that sometimes the very much anti-corporatist regime that is being projected into the world right now should, in some cases, be a bit of an anti-politician discourse, because maybe the ones we need to zoom in a little bit more right now are no longer the corporations, who I think have made adjustments, and rightfully so, because we had a ways to go there. But as we are seeing that the global network of taxes and treaties makes most avoidance schemes, the avoidance schemes ineffective. And there is indeed a big refunneling of private to public funding, then we should be extra critical of the next step. How is the public funding being used? And these Pandora leaks actually show us that there's still a long ways to go. So we commend the ICIJ for their fantastic work. We thank everyone for, dropping in to view this webinar, which I enjoyed myself very much. It's an honor to see many people from so far abroad also dropping in. We thank you very much and wish you a lovely evening. Thank you very much.
Bye, guys.
Thank you.
Thuis?
Fantastisch. Bye bye, everyone.